The planning conversation starts here on the Income Protection Podcast. Here's your host, Mike Cogdall and Grayson Owen.
All right, Mike, we're back. Hope you had a wonderful Thanksgiving holiday. I see you have a Christmas tree in the background. How's everything down in Florida, man?
It's cold. It's not as cold as it is like in Minneapolis, but it is cold. 40 degrees around here and cloudy and rainy. It's a good change, my friend. Thanksgiving was phenomenal. I drove all over the state of Florida because we have family down here and we have a kid that plays basketball. So the normal stuff. Gearing up for the holidays, it makes you stop and ponder, makes you stop and think about, what's important. We can't do disability 24/7. So family's pretty important. What about you?
Yeah, everything's good here in the Savannah area. And we are excited to announce that we have a special guest with us today. That's from up in the cold north in Minnesota. So would you like to introduce our guest today?
Absolutely. It's Corey Anderson. And we go back a long way, Corey. First, thank you for joining us today. And secondly, how is your family and your Thanksgiving?
Wife and the 4 kids are all great. Good to have a college kid home for the break and just loving this life, loving this business. It's an amazing opportunity we have in life.
It is. And let's just start right there, Corey. Give us a quick background on how you got started, why you decided to do what you do, because you're one of, if not the first, what I call broker that I'd ever met. So why don't you just spend a couple of minutes and give us your backstory, if you would, please.
That I'm even in this industry, I kind of laugh. I had a 1.3 GPA sophomore year, first semester of high school. That's not college material. Somehow ended up going off to college, and I have never been a homework fan, never will be a homework fan. I think homework is the devil. But anyways, with that said, I'm a hard worker and went off to college, graduated early, got in the financial services business with a Guardian General Agency, and never picked up the phone, never called anyone, failed miserably pretty quickly, and was introduced to the brokerage side and was in the brokerage side helping people get through underwriting. And did that for about 6 months and then became a brokerage rep calling on advisors. I did that for a while and I was frustrated and I didn't realize how frustrated I was, but luckily somebody else did. And they gave me the opportunity to say, you know what, why don't you go be a broker's broker and do it for them? Frankly, financial planners, insurance agents, life agents, property casualty agents, no offense, but most of you are absolutely terrible at selling disability insurance. You'll say the client said it was too expensive. Well, no kidding. Nobody wants to pay for this. However, they want what it does. And so I started this broker's broker model with the vision of a couple other wonderful people. Mike Sir was part of that, and George Davidson was part of that. And we started this broker's broker model in 2003 and calling on advisors and saying, look, do you enjoy selling disability insurance? Most of them say, I can't stand it. I don't want to deal with it. I hate it. Or I've had a nightmare story, and they'll tell you their nightmare war wounds that they have. And so it was just an opportunity there. However, doing disability insurance is not an overnight success. It is a long, long, long road. Grayson can attest, Mike can attest. If you get a referral to somebody and it's like, hey, this client needs disability insurance, if it goes fast, you get paid within 6 months. But reality, most of them don't go fast. It's like a cat and mouse. Hurry up, slow down, hurry up, slow down. You kind of got to read the room when you're working on this. You don't want to be a pushy salesman. If you're a pushy salesman, you'll get chucked out the window pretty quick. So I started the broker's broker model in 2003, and it was more or less just realizing that advisors don't like doing this, and there's an opportunity there. And it's not even now, I look at it as, yeah, they don't like doing it, but frankly, they're not going to do it. Most advisors, if I went in a room and I had 100 advisors in the room and I said, hey, how many of you protect your personal income? Like, no, seriously, how many of you actually protect your personal income with a disability policy? If they had to actually raise their hand, there would probably be less than 20% that actually protect their own income, in my opinion. Maybe I'm wrong on those numbers, but it's sad how many in our own industry don't even believe in this and take care of it, but yet they have homeowners insurance. They have auto insurance. I mean, how many of them take and file a huge, devastating homeowner's claim? I mean, I had a $150,000 claim in the last 18 months on my house. But if I look at all the premiums I've paid in over the years and all that, I probably still haven't even gotten back what I put in. And so you look at it and it's like, would the $150,000 have devastated myself and my family? Probably not. But yet I pay that homeowner's insurance premium every single year. Why aren't we paying our disability premiums? Why aren't we protecting us if we get sick or hurt, not if, when we get sick or hurt.
Another question for you is here, I'll phrase it the easy way. Do you find it harder to deal with a client or with a producer allowing you to do it? Because I would guess, and you can answer this question, most producers, I agree with you at the 20%. We can make up our own numbers. It's our podcast. But I've seen this because, as you know, I worked on a case for 25 years that's nothing but financial services people. And the number of people that do not or did not or have not owned it is remarkable. But would you say that they all agree, if you go, yeah, but you agree that your client should have disability income and they should protect their checks? They all shake their head, yes, don't they? And you've seen me do my little, but I'm not going to do it theory, right? You've seen it. So what do you find harder when you finally get to a client from a producer and then go through that process? Just give us an example right now. First answer that. Is it the producer or is it the actual client that makes it more difficult for you to just keep going forward every day?
It's the producer. I look at the advisor as your relationship with the client is to understand their money and to understand their worries and their emotions and what is their emotional baggage around money. And it's something where most of the advisors believe the client needs it. Well, then why don't you just find them the money? It's literally just a cash flow issue with a lot of them. And it's like, well, take it out of their investments or say that this is the account it's going to come out of. In fact, you know what? My best advisor literally has it come out of their investment account and it drafts out of the account that advisor has control of. So that client never sees it come out of their personal checking account. The advisor handles the premium. They handle the follow-up. They make sure the premium is paid on time. The advisor takes that responsibility on for the client. And it's amazing how it's a whole different conversation with his clients, because his clients literally he'll put in the notes when he schedules it on our website. He'll schedule the meeting and he'll say, give them the Cadillac plan. If they want to go with a Ford or Chevy, that's okay. And he'll just kind of lay that out. We'll talk it through. And then it's not if we're buying disability insurance, it's how we're buying it and going through that process. And it's like, give your clients permission to spend the money. And that's where I look to the advisor and it's like, their money inside and out. Just help them find the money. If maybe they reduce how much they put in their 401k and they put a little bit more into the side account that you pay the premiums out of. You both agree, the client and the advisor, that they need to protect their income. Help them find the money. And we don't need a Cadillac for everybody. 90% of my clients never go with the Cadillac. I don't even buy the Cadillac myself. And I talk about that, like true own occupation. Oh my gosh, I think it's the most oversold thing in America. But you know what? If a client really, really wants it and they understand it, once they understand it, I'll let them buy it. But if they don't understand it, I'm not letting them buy it. They need to understand what that means. And I'll have them even make a little spreadsheet when I'm talking to them on the phone. And they'll even go through and I'll be like, well, run these numbers, do it this way. And then all of a sudden it just makes it come to light. We have them basically do a storyboard. And then they're like, no, okay, you know what? I don't need that. Or last night, I was on a phone call with a husband and wife. The wife goes, if I can't work, I'm going to be a mother. That's what I'm going to be. So she goes, I don't need true own occupation. The husband said, if I can't do what I do for a living, I'm going to do something. Well, he wants true own occupation. Great. So the wife's getting own occupation if not working. Husband's getting true own occupation. But that advisor literally gave them the permission to spend the money and get the insurance and go through it. And like even that client, we will, for example, they're 35 years old. Do you put cost of living on or don't you? I'm of the theory, yes. But guess what? Most of our clients, we help them drop cost of living by the age of 45. Is that right or wrong? I don't know. It's what do they feel comfortable with? We do a lot of big increases on clients as they make a lot more money. If you go from $10,000 to $15,000 a month of benefit, maybe to mitigate some of that premium, you remove the inflation protection once you're 40-some years old. Yep. What's the best policy? The one that's in force at claim time.
Correct. You and I have always said that. I don't care what the features and benefits are. The best policy that can possibly be had is the one that you own the day you need it. It's where the rubber meets the road, right? When it's claim time, when something really happens to the world. And I'd like to go back for just a second, Corey, because what you just said was phenomenal. And for all financial advisors listening, I like everybody. So we can put that aside. But what you just said for your financial advisor that does exactly what you said is one of the most brilliant things I've heard in a really long time in the broker market. Your only job is to help them find the money. I'll figure out where to put it. And we know where it's going to go. It's going to go to a disability policy, but then I'll do nuts bolts. I'll be the expert, right? I'll be the guy. If we could get more people on board with the money is there somewhere and the financial planner, you're absolutely correct, or the insurance person, whatever we'll call in financial services, the AUM, whatever anybody does, the RIA, it doesn't matter. Brilliant point that, where the money is. You help me find it. because you know where it is. Tell me approximately where we think we can go, and I'll build it.
Well,
And
the other genius element to that, Mike and Corey, is that in that situation, the advisor is using the account that the client's likely going to have to pull from if they don't have insurance. So that's the other genius element psychologically from the client's perspective. They're not seeing it draft out of their account, but they're going to have to tap into this other brokerage account eventually anyway if they don't have the insurance. So why not pull the premiums from there? So I think that's absolutely genius. So thanks for sharing that, Corey.
It is. It's almost like saying, would you rather draw 100 a month or 10,000? Your choice.
Yeah, it's. And the funny thing is like, even sometimes we get into the riders and like, do I need this rider or that rider? It's like, either way, you're going to be fine. Either way, you're going to be fine. Like, whether you have true own occupation or not, versus own not working, you're going to be okay. Is this premium going to make a difference in your life either? Sometimes we're splitting hairs over saving $300 here or there. And it's like, I mean, literally the call last night with this husband and wife, and it's like, they're like, oh, for $360, or he goes $30 a month. I don't care. Fine. Just put it on there. And I go, okay. What's also neat about doing that and having the conversation with the advisor this way, I'm not there selling anything. I'm literally basically helping them buy. I'm helping them as a purchasing agent, in essence, figure out what they like. And they appreciate that I'm not there saying you need the Cadillac Escalade. And I literally tell story after story and relate it back to myself, relate it to other clients. I don't think all of this is necessary. I like these options for different reasons, but like, do you need full mental nervous coverage? I like it. I have 4 kids. I don't know what's going to happen to my kids. I'm not worried about me. I'm worried if something happened to one of my kids, how I'd react. So I like full coverage. However, half of the population can't even get full mental nervous coverage. So now all of a sudden, out of the remaining half, how many are going to pay an extra 10% to have full coverage? What do you want? Do you want full coverage or do you want decent coverage? It's just conversations and stories back and forth with the client. And it's like, what an honor we have. Like, think of this. I still can't believe I knew a woman's cycle. We were trying to get short-term disability like back in the day, and we were trying to get it done before she got pregnant. It was so awkward. But like, that I even knew that about her. Like, the stuff that you have the honor of helping them through with their medical, they share stuff with you they don't share with their spouse. I've had that numerous times. And the amount of in detail things you get, and that's their medical, which is some of their most private stuff. Then guess what? You get to flip to the next conversation, their financials, which, I mean, literally we might as well talk about politics. That's very personal, and do that. And then their occupation. And then, oh, by the way, what's your future plans? And do you actually plan on having more children? Like, people are like, you asked that? Yes. I want to get to know these people, but they frankly are getting completely naked on everything in their life. There's like literally no boundaries. They're telling us everything. Like, what an honor we have to be able to unpack all that with a client and help them through the process, and then hopefully protect all that and wrap it up with a nice little bow at the end. Like, what an honor our business is. And then to be able to be there at their worst time in their life when they're sick or hurt and they think the world's ending. I love this business. Like, being able to help advisors and clients, it's amazing. Like, how much we even get to know about the client that they won't share with their advisor. The question we always ask is, what am I not allowed to share with your advisor? Because sometimes we'll get into stuff and they're like, hell no, I don't want my advisor to know I'm on, a big dosage of anti-anxiety or antidepressant or this or that. Like, okay, that's fine. We won't talk to them about that.
Corey, right there, all the more reason for everybody that's in financial services that chooses not to do income protection or disability insurance, as we call it in the industry, all the more reason to find somebody like you and go do this, because you really have taken, we'll call it an AUM guy. You've taken them off the hook on everything, correct? They're out of the picture. You even get to deliver bad news if somebody doesn't get insurance because it's declined. Is zero reflection on that advisor, because the advisor doesn't do it for a living, is not an expert. You are. So my question to you is, how does the advisor, and you have enough advisors and you just related a really, really, really good one, but how do they tee it up for you? I mean, do they just go through a financial plan and say disability insurance and they go, oh, I might be interested? how do your best advisors tee it up for you? Because you haven't talked to anybody yet. They have to tee it up somehow. And I use the word tee it up because I think everybody understands what I mean.
So when they're talking to their client are you working because you want to or you need to? Simple question. It's not really that complicated.
Now, have you taught that to people? Because some people, the most simple question in the world is often overlooked.
Are you working because you want to or you need to? And if you're working because you need to financially, which me as the advisor believe that's true, that you need to keep working. Otherwise, your financial plan's not going to work. You're not going to have the house you live in. You're not going to have all these other things. You can't retire financially today without a lifestyle change. We need to protect your income. It doesn't matter about age. Like some people are like, oh, well, they have to be under a certain age. No, we were writing a 69-year-old attorney the other day because she's making literally 2.5 times what she was making 5 years ago. And she wants to change her lifestyle to the new income. So she wanted to protect at age 69. People are like, what? Why would you do that? No, she wanted to do it because her lifestyle has changed. Point being is, are you working because you need to or you want to? And if you're working because you need to financially, then we should address this and protect your income. And literally, how much is it going to cost? I don't know. Maybe 1% to 2% as a male, 2% to 4% as a female. I don't know. 1% to 3%. Say whatever you want, but we'll have Corey work on this. And then they go to our website, disabilitygeek.com. Go in the top right corner, click on schedule an appointment, and they schedule it with the client while the client's in the office. Those are the most successful advisors. When they're literally having the conversation and they say, okay, we're going to have Corey do this for you and the DI Geek team. Here's how we do it. Literally, what's your calendar? Pull up your phone, pull up your calendar right now. Let's get it scheduled. And then literally they'll be like, hey, did you just get that text message? And it'll pop in a text message instantly that, hey, you got an appointment on this day at this time. And then they'll get some nice friendly reminders. But it's all about the advisor saying, you need this. And if the advisor doesn't believe that they need it, there's your problem right there. And then I would say to a client, if they're going to look at an advisor, if an advisor's not talking about income protection with you and you're working because you need to, you're probably with the wrong advisor. I think financial planners, if the three of us wanted to make way more than we do now, would be starting a law firm that all we do is sue advisors for sucking. Literally, financial planners, no offense. Well, actually, I don't care anymore. They literally, most of them are horrible at doing their job. Your job, part of a financial plan, is the protection component. It's not just $1 million 20-year term, which that's a whole nother conversation about how sad that is. But income protection, making sure it's protected. Group insurance, we could spend hours on how much group insurance sucks. We offer group disability insurance, but there's so many limitations. It's a rented policy, not an owned policy. If you want to actually take care of your financial plan and make sure it's protected, your clients are owners. So get them something they own, not rent.
And we should say there's a lot of good financial planners out there too. But I agree with you. I think you start with a financial plan, almost with the old Cogdall cliche, right? Here's where the financial plan starts. When was the last time somebody died and then got sick?
Yeah.
You start from the very bottom of that pyramid, fundamentally at the very bottom. And you do have financial advisors that you work with and have worked with for years that are phenomenal. And we both know that, or you wouldn't even be in business. But I'm surprised that, you know what, for lack of a better term in today's world, that your phone doesn't ring off the hook, that people don't call you to want to work with you, hear what you have to say, because you're straightforward, extremely honest, which is very important in our world, integrity beyond reproach. And I just can't understand why people wouldn't be calling saying, you know, I need to do this for my 50 clients. It just doesn't really happen that way as we kind of head down the end of this podcast. It just doesn't happen that way, does it?
Doing nothing helps no one. That's what the advisors need to understand. So if they aren't going to do it, they need to refer it out.
You don't wish this on anybody, but you almost wish every advisor would get a really good disability to happen in their book and not have the client protected and all of a sudden see what it does. And it's like, your client, one of the first calls they're going to make them or their spouse if something happens is the advisor. And being like, what's it going to look like? Well, we're going to look at your group insurance. Hopefully you have group. And then, oh, there's all these problems. Or shoot, we never took care of that. Like, what an awkward conversation that'll be when you realize you don't have the right protection. I mean, the other thing, I like people get caught up on like that whole 60% thing. What a joke that is. I don't know. Like if a client makes under $400,000, guess what? We can protect 115% of their income. I'll say that again. If they make under $400,000, we can protect 115% of their income. But yet advisors let them walk around with like 40 and 50% replacement. I don't know. Are they investing 50, 60% of their paycheck? Probably not. So Let's protect it, make sure it's taken care of. Stock options these days, what a joke that is. Like look at how much people are making off of restricted stock options and different stock incentives. Group plans don't cover that. Like we can cover that on the individual side. So again, as an advisor, I hope you do some internal soul searching and say, are my clients working because they want to or they need to? And then address it. If they're working because they need to, get an expert involved. Literally reach out to somebody. They're willing to help you. One other thing too is you ever run into those advisors that they're like, all my clients are retired. Yeah, my clients are retired. Okay, great. Do you need disability insurance? They'll say no, and I'll say yes. And the reason I'll say yes is how many of them, their entire financial plan of their clients is on the assumption that everything just goes hunky-dory. They don't think about their kids. And what if something happens to one of their kids? They're never going to let their grandkids go without food or a roof over their head or a nice school or nice clothes or a nice car. So if something happens to that retiree's adult child, guess who's going to have to step in? Grandma and grandpa. So their whole financial plan is literally going to have to insure their kids too if something happens. So a great way, a segue to get in with those kids, those adult children that are working. Hey, you know what? Let's make sure they're taken care of and making sure they're protecting their income as well.
And that's a really, really good point because you just talked about a single disability affecting 3 generations. And a lot of people don't have that perspective that you do. That's why you're so good at what you do. And you've just given us a world of information about how this can work and why it is so important to have, it's the first thing. It should be the first thing on the list. And you and I have said that for years. It needs to be the first thing on the list, because without income, nothing else works, right? Without income, you could even have a trust fund. I don't care. You don't need disability, but without money, as they used to say, if you don't care about money, just try living without it, right?
Yeah.
And that's what it comes down to.
Why can't we get people to also look at it as often as they look at their homeowners insurance? I mean, you live in Florida. I live in Minnesota, probably 2 of the 5 worst states in the country right now when it comes to homeowners insurance premiums and what's happened over the last 3 years. And all these people are scrambling and freaking out about it. What if we actually even paid, like 1/5 of that attention towards protecting your income? Why aren't we reviewing it every 3 years, every 2 years?
And that's a really good point. It was speaking of homeowners insurance. That's the other thing I used to tell people, and you've said the same thing. Is like if homeowners insurance is so important to you, what's on the 3rd page of your policy?
Yeah,
that's where features and benefits come in. Corey Anderson gets to figure out for the client and make sure that they understand what they bought and why they bought it. Because I've never had a property casualty agent go, "Hey, go to page 3. This is that sewer line thing that we were talking about." It just doesn't happen. It just does not happen. By the way, the sewer line's not covered, but anyway.
Got to get that added. Corey, last question for you. I'd love to hear your perspective on the next generation coming up in the business. And I know we had a little bit of a conversation at the NAFA event in October about this. For the up and coming agents and advisors out there, or maybe someone who wants to go specialize in DI, what advice would you give to the next generation?
Well, Grayson, I'll give you props for going to the NAFA meeting. Hopefully more of you get involved in our industry associations. I'm on the board of 4 different ones in our industry. So please volunteer. We need you, especially your young advisors. 2 with it is I think if you're asking a younger advisor that wants to become a disability specialist, is that what you're asking about, Grayson?
Yes. So up and coming advisor and or somebody who wants to specialize in DI.
Well, there's never been a better opportunity for disability insurance. It's the easiest underwriting it's been in the last 25 years. Easiest. However, you need to know the weeds. You need to understand the complications of different things, and hopefully you become a specialist. I think of it as if you lean in hard on it and you want to become that niche person, there's so much opportunity as a broker's broker. I think the broker's broker model, there could be 1,000 people doing what I do, and we would still be scratching just the surface of the industry. Is advisors need help. They need recognized experts. So if you're not going to become that person that spends 10 or more hours a week on it as an advisor, team up with somebody. And then if you're that young producer, we just got somebody that we sponsor a cruise called the Financial Connections Cruise. It's college students that are looking to get in the industry as a financial planner or insurance agent or actuary or something like that. My associate partner, Erin Wallace, she just joined our firm in July of 2025 here, and she's now an associate partner as of November, and she's working with advisors, being a specialist on disability. She sees the opportunity where the sky's the limit. This is like such a great industry. Think of like even financial planning. You get to pick your own hours. You pick when you work. Like last night, I was doing phone appointments from 6:30 until 10:45 at night. And people are like, that's crazy. I program it around what my family needs and figure it out. I was at the hospital for 8 hours with my mom who was in the hospital. So I literally changed my schedule around and did evening appointments, and my clients loved it. Like, what an opportunity to never miss your kids' sporting events, be able to be there, make a great living, and do wonderful things for your customers. I literally, like, I'm blessed to be in this industry, and I'm thankful for what this industry has done for me. And I hopefully will leave it better than I found it. And I don't know, that this business, there's so much opportunity. If anybody ever has questions or is like, hey, how can I do what you do or what Grayson does, or, well, don't do what Cogdall does. That's a bumpy road. But if you ever have questions or ever want some help, literally reach out, 844-700-GEEK or disabilitygeek.com. We are literally more than happy to be a resource for you in any way we can.
The interesting thing about that at the end here is, you know what? It's such an honorable profession. And I tell all producers that I've ever met, regardless of how they are in this business, we forget just how honorable it is. You have never had somebody buy something they didn't need. Now, look around your house and think about all the things you don't need. It could be almost infinite, but you have never, ever, and this is what I say about what we do, we have never had somebody buy something that they didn't absolutely need. You are credit to our industry, Corey, and I can't thank you enough.
Thank you, gentlemen. Greatly appreciate it.
Corey, thanks for coming on. We appreciate it, and we'll talk to you soon.
And happy holidays.
Happy holidays.
All right. Thanks, gentlemen.
And remember, financial planning starts with a risk protection package first.
And your clients are counting on you. See you on the show next time.
All right, my friend, be well.